All right, welcome everybody to our educational webinar. This webinar, this webinar's topic is basically about connecting the weekly and the daily time frame. Why? Because once you learn how to connect the daily, mainly the daily time frame, trading becomes easier for you. That's when you start sniping bigger moves, or scalping bigger moves, good, with bigger or higher probabilities too. So let's get into this. Let's basically get into this. Good. Let's basically get into this. So from the weekly, you always get the most recent demand. Good. So you don't need to be precise at the moment. You just like as an idea and as a thought, good, or process. So you don't need to be precise. Yeah. So on your weekly, you get your most recent supply and demand, right? So, however, when you come to the daily and look at things, you start seeing things with more details, right? Start seeing matters with more details. So you had your most recent supply, which is this supply, right? You had your most recent demand, which is basically this demand, right? Now, this is not just it. This is not just everything like supply and demand. No, you need to understand the behavior of the market and what the market actually is telling you to, good, and what the market is actually telling you to. I need to understand when to speculate and when not to speculate to. Good. So over here we had a demand, right? Over here we had a demand. And at that point of time, I was still buying. I bought this and I bought this here too. And I still bought this here too and I lost. Good. But however, after that I started selling. Why? Because here we had a top. Good. We had a top. Looking at the weekly at the same time too, if we look at the weekly at the same time, what we're going to notice is we have this nice validation candle and liquidation at the same time. So it didn't liquidate the upside, it liquidated to the downside. What it did is it liquidated this bullish candle, right? It liquidated this bullish candle. And then we had this bullish bearish candle closing in the middle. This is an indication of what? That the next candle is going to drop to the downside. Good. Whereas the downside is going to be going to the first spot or stop, which is this region here. And most probably, because this is just a wick on the weekly, most probably is going to be coming to this region, right? To this whole region, right? So when we look at this on the daily, what we're going to see is, okay, we had a first bearish pressure to the downside. However, looking to the left, we can connect with it as a bows, as a recent structure. Good, good. That's why we even had this wick here and this bullish pressure again. This strong bullish pressure from here coming again. This strong bullish pressure again here too. Good, but you gotta think about it. If price was literally going up, price would have been going up after this candle. Good, after this bullish candle, price should have started accelerating to the downside, but that didn't happen yet. So we got a bearish candle closing inside, an indication of what? That, okay, I liquidated this, but still it didn't break the low of this week, right? So we needed it to what? We needed basically a liquidation for this week, right? And a liquidation for this week. Why for? Why? Because once those two wicks are liquidated, which they represent, this wick represent the most recent bulls, right? Broke out of it, retest again, right? And this represents the most recent one. However, this represents the most recent demand, which is coming from this wick here, right? So as far as it liquidates this low of this wick, we good to start falling. Why? All right, let's take it step by step. Let's basically take it step by step. All right, we had a supply to the left, right? Broke out of it, liquidated it, boom, this candle, closed bullish. So we know for a fact that, okay, we're pushing up, we're going to this region here. Good. I wouldn't lie. I've never expected that this here would generate this rejection. Good. But it was just lucky market at that time, which they announced that like, okay, they're increasing interest rates in 2023. And sometimes the market is irrational. Sometimes, seriously, the market is irrational. The market is fully manipulated, just for you to be sure and aware of this. The market is fully manipulated, full of fake volume too. And it's been mainly made to take your money, not to give you money. Good. So sometimes it's fine to be faked out or scammed by the market because you need to outsmart it sometimes, or most of the times to make money. So after the break of this, we had the first stop, which is this here, right? Which is this here. The bows broke out of it, retested it, boom, liquidation, pushed to the upside. Now, when a price got rejected from here, we had a station. Where is that station gonna come from? Basically from here, right? Basically from here. However, we got rejected, we pushed to the upside. Now we forget about this station because we already went to another station. We already went to another street, and now the street is here, right? Now the street is here. This is the most recent one. However, when the price came back here and got rejected, then we forget about this one here, and this becomes the low of this becomes the recent what? The recent demand. So price closed bearish, liquidated this, closed inside it, closed even below the open too, but still didn't liquidate the demand, right? Then we got this candle liquidating basically all of this structure. So what does that mean yet? What does that mean yet? What does that mean? That means that, okay, next candle is going to drop a higher wick and push it to the downside. However, next candle was kind of small. So still, that doesn't mean that the scenario is invalid. That means that, okay, we perfectly pushing to the downside. Good. Stop pushing to the downside. Where is it going to? This is your recent demand, right? Looking to the left, this is your recent demand, right? This is basically your recent demand. Even this wick that came from here, this is the bows from the left too. You got rejected. You see, each level gives you money. Each level gives you money. You need to know when to X and when to stay. So when this got rejected and it closed like this, you should be cashing out money from your buy from here. Why? Because it closed bearish and it liquidated this whole thing here, right? Even if you're still holding, next day also closed bearish. So there is another sign for you to close it. So what does that mean? That means that, like, okay, we're most probably gonna liquidate this and push to the next demand, which is this demand here, right? Which is basically this demand here. And by the way, this demand also represents another structure too, another bows too, right? So once you see this big momentum candle, you know for a fact that the next one is going to be the same one. It's going to be bearish. So look at this big momentum candle. Next candle was bullish. Big momentum candle, bullish candle, Big momentum candle, bullish candle. 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 Big momentum candle, bearish candle. Big momentum candle, bearish candle. Once you start seeing, that's when sometimes you're confused. Like, okay, why is this crazy man is like putting 50 lots on this trade? Come on, because if you look at the daily or the forage and you see such a big candle forming, you should follow it. That's it. This is an impulse now. This is a trend now. This is a trend. This is not a consolidation. And trends, they don't retrace everything. No, they move. They basically keep moving till they reach another discounted price, which is a weekly level or a weekly supply and demand, to shift the market from there. Good. So you sold, boom, came to the downside to your most recent demand, which is another structure too. Looking to the left, even too, is another structure. Good. So what does that mean now? You closed, you had a buy here, your buy got basically stopped out, or even if you want to look at it on the 1 hour, if you want to look at it on the 1 hour, no, you got stopped out. Good. You got basically stopped out. Then that, what does that mean? What does that mean for you? Good. What does that mean for you? You don't even need lines. You don't even need nothing. You just use your eyes. Use your goddamn eyes to see matters. Now your brain to think about matters. You need to see it, then think about it. Without seeing it, you cannot think about it. Good. So we had this big, massive momentum candle forming, right? Liquidating this to the left. What does that even mean? That means the next candle is going to push where? To the next where? To the next demand, right? To this next demand here, right? However, since this created a lower wick first, and since it's already closed around a structure, around the demand, so we're gonna expect a what? A higher daily wick, which is basically here. So it got rejected, right? Even on, sorry. So it got rejected, bearish candle. It's gonna do what? Another bearish candle, right? Bullish candle. But looking from the left, you don't neglect nothing, basically. You see, you don't neglect nothing. So looking to the left, what I have now is what? What I have now is a potential daily high, right? What I have now is a potential daily high, right? And this potential daily high, it's basically can be our what? Our wick, right? Our higher wick, basically. And then you start what? You start sitting. Where? Till my next demand. So, however, when you have a consolidation, you need to think about and focus about one thing. You need to focus on one thing, which is where was the lowest point of this consolidation the price accelerated from? You look at your chart, now inside your heart, and start making sense out of things. All right. So I had this consolidation, right? We had this double bottom, price liquidated, retested, most recent demand, pushed, breakthrough, liquidated this, right? So this was the most recent supply that liquidated. Even looking to the left makes sense, which this was a higher wick of a monthly time frame candle. Good. So liquidated. Now what you're actually gonna be waiting for, you wanna wait for a retest for this, right? You wanna wait for a comeback for this. You want to wait for a comeback for this. However, you got this here too. Good. You got this here too. So you need to wait for a comeback for your region, right? So, however, pushed back again, drop liquidity, pushed up. So, where is the most significant point in this whole bullshit? Which is basically this, right? Which is basically this. Even if we go to the 1 minute, oh, that's gonna be tough going to the 1 minute. So you see this candle, you see this big candle. This is imbalance, right? This is imbalance. And then what you have is you have basically your most recent supply that this liquidated, right? That this basically liquidated. So we need what? We need price to be confirming this as a liquidity region. We need price to be confirming this as a liquidity region. You know, since was the most recent supply for you. Then back to the daily. So things on the daily are way easier when you look at it. Right? When you look at it. So we come to the conclusion that all of this is like, yeah, okay, I respect all of that. This is give us a rejection, by the way. Take it here. Even you go to the hourly. See, this give us a rejection, and this is not a cheap rejection too. 270 pips. Good. 270 pips basically. Good. And even this one here too. No, notice the last price. So even if you got stopped out, you still can re-enter at now, which is the recent demand, right? Which is now, which is this is as a recent demand since price came back into the upside, pushed back again, first week, boom, 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 liquidated again, still close a bullish candle too. You still can buy a buy limit, a buy stop or already a buy limit at the way back to this recent demand now. Good. So losses are a part of the journey. Good. Losses are a part of the journey, but if you really focus how you trade and which kind of numbers you're trading and executing, good, your losses are nothing. It's nothing to be mentioned at all. Good. Your losses are basically nothing to be mentioned. You know, are basically nothing to be mentioned. So we agree that this was the most significant price that okay pushed, created the pressure, and already created a block here, a liquidity block that okay, this place is not going to be broken easy like this, right? Then you keep on following the market basically. You keep on following the market. So we also even bought this. We bought this, we got this rejection, we even bought this again. So this closed bullish. So what do you expect? Next one to close bullish, right? But it didn't close bullish. However, look at this lower wick to the upside. See how much was that of 160 pips of a bullish worth of bullish pressure. Good. Then you come to the fact, which is good. Then you come to the conclusion like, okay, this closed bearish. So at the time that this closed bearish, you gotta understand why this closed actually bearish. So you gotta understand like, okay, what am I actually looking forward to? So we had this first. Good. We had this first as a critical point that price gonna respect, and we get this one too, right? However, however, what's up with this? Coming from the left. It is already old, right? It is already pretty much old. But however, the price already reacted to it here too. You know, so that's why I'm always saying there is no right or wrong. You know, as my best friend and I, so I had a best friend who we are constantly trading together before like 4 years. You know, and we trade almost like the same style because I taught him, but we never traded the same side. I'll be buying and he will be selling. You know, and we both right. Basically, there is no right and wrong. There is where your entry is, and where you should enter, and where you shouldn't enter to. Good. So forget about this now because price already reacted to it here, right? So this is my most recent one. So I have a supply here first. Here I have an important supply. Then price close bearish. That's an indication of what? Of I'm most probably gonna get what? Gonna get a consolidation. Good. I'm most probably gonna get a consolidation. Looking even at the 4H, you can see that this is the supply, right? See how price actually reacted to it so far. Then you got the first daily. So wait a second. Yeah, you got daily closing pretty much bearish. Then you got the bullish closure. Then you got the bearish closure of the daily. So by now you're already looking at the chart and be like, okay, lower high, lower low, lower low, right? And I got a high here, and I got demand, and I got supply on the upside. That's how you fucking create a fucking consolidation. Excuse my French. That's how consolidations are being created, which is when you're being squeezed between a supply and demand, and you're already to the left, you have a consolidation too. Good. So that's when you even understand the fact that, okay, I gotta chill with my holdings. I cannot be holding to. I cannot be holding to. But however, however, so we say like the bearish close, bullish close, right? And then we had this basically bullshit daily candle, and then we had a bullish close again. But don't forget, look at price, how precise price can be, you know. So you could have missed this, but you couldn't have missed this too. We're talking about 200 pips. Yeah, from here to here, we're talking about 200 pips, almost 200 pips. Good. Then you keep on basically moving the market after that, right? You keep on basically moving the market after that. So price pushed to the downside, you got rejected from here, but wait, chill out. There is something to the left. There is something coming from the left, right? Which is this here, because on the way when this was coming down, you should be expecting a kind of rejection from here to happen for price to keep on pushing up. But that didn't happen. Price pushed through it and pushed to the downside back to this demand, right? Then price came back and got rejected again from this level too. Again, price got rejected again back to here. Got rejected again and pushed to the downside. Again, then pushed all the way down to where? Remember that critical price we talked about. Remember that critical price we talked about. Boom, first rejection, good. Price got rejected from here. Why? Look to the left. Look to the left. Look at this week. Good. Look at this week. And where's this wick coming from? Go back to the left. Good. Go back basically to the left. So this is a sensitivity region. To the right, you should see some sort of sensitivity too. So you saw sensitivity, boom, 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 boom. So price moving slowly. Even the bearish pressure is moving slowly for it to push to the downside. However, I was selling though. I sold this candle here. I sold this candle, this bearish candle here. I even sold those here too. Good. Because again, you focus on one way to trade. You cannot just mess up. You cannot just be a CEO. You cannot, and a chief marketing officer, a chief financial officer. You cannot be all of those. There is no accuracy in your job. There is no quality of the shit you're getting done to. Then again, when it came to the demand, even if you don't want to have your buy limit at this recent demand here, this closed beer bullish, right, with the wick. So you got like first, you got a first confirmation, yeah, second validation, first validation, second validation. So you can be buying, stop loss below here. You can even be taking it to the upside. So it's completely up to you. Even when it broke this, look at the left, retest, boom, push to the upside. You got rejected from here. Why is a sensitivity region? It's a supply. Right, it's too wide here, but you can get it from the 1 minute time frame. It's super precise on the 1 minute time frame. Now it's coming back. Where is it gonna go? It's going. It's gonna come to this region. Where precisely in this region? Boom. Then push to the upside. Easy job. Perfectly easy job. When price is trending, you need to take advantage of the trend. Because moves fast gives you more. When price is going against you, just you gotta be creative. You need to close. You need to close and get away. Just get away with your money because the market will take it from you. Ain't no mercy in here. Seriously, ain't no mercy in here. And all of this, where we got all of this and all of this confidence with it, with execution stuff, daily, with a daily time frame. We got it from the daily time frame. You know, even if you only opened one trade on the top here and you healed it till it came back here, it's up to you how you take information and how you deal with information. You know, my job is to show you the information, give you a way how to deal with this information, how to make money out of this information. The way you interpret it is totally on you. It's not on me. Good. I personally love scalping because I make money in a couple of minutes. I'm done. Good. I lose money when I start outsmarting myself and I start speculating on a daily basis. That's when I lose money. Scalping is 100% based on facts. It's 100% based on facts. If you want to have a look, go to the 1 minute. You just look at New York. You don't even need data. You don't even need fucking data. Good. You don't even need fucking data at all. So looking at just the 1 minute, looking at one day, good, looking at even only one day. So you have this structure here, right? You have this supply. You have this pretty much recent supply, right? Price broke out of it. Where is it going? It's going basically to the next supply, right? So where is price going? Price going to the next supply. Buy stop. Here is a trade. Yeah. Here is a trade. Then you want to sell this supply. You got stop loss. It doesn't even matter, right? Doesn't even matter. Then what happens? Then what happens basically? We had this recent pressure, right? We had this recent sensitivity region. Good. Price rejected, came back to the most recent sensitivity region. Push to the upside. Again, that's when you have your second entry, your first entry, because it's almost impossible to trade this, but you can be trading this. Good. You can even so you can look at it from like this. So it liquidated the supply to the left, right? And then what it did is created a high, liquidated this high, this previous high, right? And then push back again, double bottom, right? Double bottom here, broke the supply, you get a rejection, look to the left, you're gonna get a rejection 100%. However, no price pushing down, where is it gonna push? To this recent demand, right? You can take it like this. You even look at, even take it to the whole lift, and you see that, okay, this is an important price. This is an important region too. Even so, you can do it structure. You can do it without looking at anything. You just can trade the 1 minute by itself. You can even trade the 1 minute by itself. Even when price, when you got stopped out here, first, when you got stopped out here, and price pushed back again to the downside, even look at it as what? As okay, when price came back here, I have a supply. Can even be selling this one here too. Okay, you got a bearish confirmation. You sell. Stop loss above this candle. 16 pips. Your TP will most probably be here. So so you either end up with a break even, yeah, or you end up with profit. It's totally up to you. The way you interpret information is totally up to you. You can be making money on any move. You can be literally making money on any move too. You can be literally making money on any move. Even coming to New York. Even coming to New York. Good. Even basically coming to New York. So you have the supply, right? You have the supply, price here. Price broke it, however, struggled to continue to the upside, broke back inside again. It broke basically back inside again. You have, remember what I told you about big momentum candles? Sell. There's a trade too. Again, look at price. Look at how nice this week is. So price came back again, bearish closure. Yeah, sell. And you take it down here too. Even looking at the whole day now. You're looking at the whole day now. So this was the agent low, right? This was basically the agent low. Boom, again, price rejected from it, pushed to the upside. So this area here is super fucking important, right? Then looking at the 1 minute, what we have here, we have structure, right? And inside this structure, this is the most recent what? This is the most recent demand, right? So you have here, and we have the boss itself here. So why do we do the most recent demand? That's because you don't want to be scammed. You don't want to be faked out. So we're already trading the fake out itself. That's why sometimes our trades don't get triggered, because we're already trading where we're already executing where people are getting stopped out. Bingo. So you either have a buy limit, you will you will trade this, no buy limit. Look at this candle, how big it is. Yet look at this candle, how it's actually big it is. This momentum candle. So buy, stop loss below, can be taking it back here, wherever you want to. Look at risk to reward ratio too. 1 to 1, no need for that. Minimum 1 to 3. Good. Good. So no need for that. So you see, that's with us not even trading nothing. So whatever. So we had this whole impulse to the upside. Good. We had this whole impulse to the upside without even looking at no history, without even looking at no data, not even knowing what's happening on any time frame, but the 1 minute. Look at this nice liquidity region. Look at this week. Look at this week. Look at this week. This is such a nice and impressive liquidity region. However, you want to be precise with it. Okay. That's us being precise with it. Good. So you either have a buy limit, which is the most reasonable way to trade. Good. Or market execution. Your buy limit is here. Your TP is back the high. Good. And your stop loss basically is below here. Why is the stop loss is wide? Because this is in New York, and look at this bullish momentum. look at this bullish momentum. So once price is really trending strong, your stop loss is going to be wider. Why? Because market is going to be achieving too many pips in smaller candles, you know. So you look at this candle, look at this candle. This candle is almost 100 pips. Like this from here to here, this is almost 100 pips. Yeah. So you already made here like 85 pips, 87 pips. Yeah. This is something to be mentioned. Yeah. Even if you miss this, and it tricked you with this like bearish closure, again this bearish closure, still, still, yeah, the supply, right? Price came back again, showing you small candles. That means like a weakness, but then drop to a bullish closure, close bullish. So that's what you do is, all right, that's when you buy again. That's when you buy again. Again, over and over again too. Over and over again too. Don't widen your stop loss. Don't put your stop loss wider than the universe. You know, that doesn't make sense. You know, you're scalping a couple of pips. You're scalping 2, 3 candles. Why would you put your stop loss like this? That doesn't make sense. That's just being dumb. Good. It works. It basically works. Then price came up here too. Price came up here too, right? Price came up here too. First rejection, second rejection. Still, price still kept on struggling to push to the upside. Good. So your risk entry can be here, it somewhere. That's your risk entry, even if you didn't even have a sell stop, you know, sorry, sell limit. Yeah. So you're gonna be, where are you going to be taking this? You're going to be taking it to the base, which is was the base of this movement after this impulsive move, right? Basically, that's the first entry. Second entry with this big momentum candle. Once it liquidates this, that's when you get another trade. And even here too. Too much. Even here too. Even here too. Price liquidated this, pushed to the downside. We had another demand here, got liquidated. We had this nice week, serving us as supply, right? Then boom, price reached out here, coming from demand. You can see it's precisely on point. Price moves, you know, precisely on point. Reached out, bearish closure. Back to the base, you know, 5.6, 1 to 5.6. Again, price liquidated this. Price liquidated this region. Look at the imbalance. Look at the momentum they generated. Look at the impulse it generated. Again, so where's your next selling region? This is your next selling region. Yeah. Probably your sell limit didn't trigger, but bearish closure. You sell, stop loss up here. TP 1 to 4. Easy job. Fucking easy job. Again, price approached this region here too, which is a strong demand region. Your buy limit most probably didn't trigger. Doesn't matter. Push to the upside. It closed inside. Bearish closure. Damn, that's making me question my beliefs. But bullish closure. Perfecto. entry, stop loss, where I'm gonna take it to. So it closed, it pushed down from here, right? After it liquidated this, right? And then we had this bullish pressure coming from the main region that generated all of this bullish pressure, right? So looking at this now, where is the most legit region for it to push to? From here to here, right? And most probably is going to be pushing up here, right? One to five. Got rejected again. You're gonna sell it. Sell it to where? To the base. Look at the base that I created in here. Good. Boom. Got rejected. Look at this consolidation. Price kept on slowing down. And then what price did? Broke out of this new high. What is it gonna do? It's approaching supply. It's gonna come back to grab liquidity. Right? Looking at the left, since this is a consolidation and it's a both at the same time. Where's the most recent one? This is basically the most recent demand that it created. However, it's too tight. That's why it pushed below it. And even if you want to trade it like this, I get long position. Your usual 10 pips. Oh, why is it so wide like this? Back again to where? To another base. And that's just you trading without even looking at nothing, without even you understanding what's happening on any other time frame. So what do you think about me giving you all of these keys about the hourly, 30 minutes, and how to execute on hourly basis, the 4 hours, the higher wakes, lower wakes, etc., etc., etc. So that's lots of science that I've been working on for my own that I share with you as my team, you know, to make sense out of things. Why would price push from here? Why would price push from here? But as you've seen, price repeats itself always. Almost every trade, had two things in common. Almost every trade has what? Two things in common. It's going down, right? It's going down. So what's up? Why it's going down? Because price was coming up, got resistance, right? You got supply. Then price liquidated this demand, right? Price basically liquidated this demand. So what's gonna happen is, if price liquidates this, then I'm gonna have what? I'm gonna have a selling region here. So once price come back to it, be selling. This is my TP. This is my TP1. This is always should be taking 50% of my money here, and then fuck it, whatever it does, does. You know, flip the chart. It's the same concept. You can see it on any trade on the chart. Price repeats itself always, 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 always. You know. So that's it for this session. Here we connected the weekly and the daily. I even showed you how to trip with the 1 minute. I'm gonna give you more tomorrow. I'm gonna give you more. I'm gonna like lie the system to you. You know, I'm gonna give the system on a plate for you. I don't care. So thank you for being here. I really appreciate it. Have a good Saturday, right? A good Saturday.